Hello, everyone, and welcome to another great episode of the Jason Howell Company Speaker Series Zoominars. My name is Jason Howell, and today we've got a very important topic for you. With record rain in South Florida, especially at the beginning of hurricane season, someone you know is about to find out whether their insurance claims are going to be honored. Today's topic is how climate and wealth are affecting homeowners insurance premiums and the like. It's actually, as I said, quite topical. With us today is Nick Nairi, VP of Private Insurance at AFP and Aon Company. His expertise makes him one of our firm's strategic partners. We look forward to hearing about what the state of homeowners insurance is. But before we get to all that, let's just welcome Nick to the Zoominar. So, Nick, welcome to the Zoominar. How has your day been so far?
Thanks, Jason. Happy to be here. Day's been great. Weather's nice. Seems like we're in for a bit of some warm temperatures here in DC.
Yes, warm temperatures have been around for actually a little bit now, a couple of weeks. So we had so much rain. Speaking of rain, we had a very, very wet spring, and I'm wondering, you are you a forecast guy because of the business that you're in? What are you seeing for our continuation of the summer?
It's interesting. With as little rain as we got last year, this feels more like a return to normalcy of what we've seen, what we're used to seeing. I know weather has been a hot topic for a long time, and we never quite know what we remember the weather being, but it seems to me that we should experience some regulation of the rainfall.
Yeah, we should have rain in the spring, just like it's expected, and it should be hot in the summer, and that makes for a really good pool season, which we have begun. So, anyway, we are very happy to have you. There is so much going around the country, especially in Florida, but in other places as well. And we're hearing a lot about this whole homeowners insurance topic and what exactly is happening with homeowners insurance. So let's get it started. I'm going to share my screen, and then we can get into the Q&A as soon as possible because, like I said, I'm looking forward to learning some about this. And I think everyone who's going to be able to see this recording is going to enjoy learning about it as well. All right. So if you came to how climate and wealth are affecting your homeowner's insurance premiums and everything associated with it, then you came to the right Zoominar. My guest, Nick Nairi, thank you so much for being here. We're glad to have an expert who basically lives this stuff, not only locally, but around the country. So thanks again for being here.
Thank you for having me.
Oh, you bet. Now, before we get started, let's just get a word from our sponsor. So our sponsor is Jason Howell Company. It's a family wealth management firm that specializes in family governance and sustainable investing. Our goal is to strengthen the finances of families, specifically those who are making that transition from first generation or individual wealth to what we call family wealth. One of the ways we do that is with our strategic partners like Nick. For more information about Jason Howell Company, you can just go to jasonhowell.com. And now for our show. So, Nick, one of the things that's really, I think, pretty cool about our relationship is you reached out to me cold a couple years ago, and I read the email. It was a long email. It wasn't one of those emails you get from people that typically reach out and have something to sell, and it's quick, and it just says hello, comma. It was actually an email addressed to me, and there were a few paragraphs. It might have been a classic eighth grade five paragraph letter. And so I read it. And I said, well, who is this guy that put in so much time? And you made a great case for me to reach out to you as an expert in the field. And so I'm glad that I did. I'm glad that we've been able to start this relationship, have this relationship over the past couple of years. And I was really intrigued by your story. I've invited you to my George Mason class a couple of times, at least once, to speak to your story about how you in particular are interested and involved in the world of risk management insurance. Could you give us a synopsis of that story that you've told me and a couple other folks?
Sure. Yeah, happy to. So, growing up, my father was sick with leukemia from when I was 3 until he passed away when I was 10. So sort of had an understanding of the impact of life insurance and, the different things that take place when that happens. About 18 months later, the home that I grew up in was a small townhouse in Marlton, New Jersey. We had an electrical fire, and neither my mom nor I were home. Uh, Fireman kicked in the back door and saved our golden retriever. And we were forced from the home for about 9 months while it was taking down the studs and rebuilt. And as you can imagine, as a 12-year-old recovering from the loss of a parent, that was an especially traumatic experience. And was fortunate enough to attend a Jesuit high school and Jesuit college. And when I got out, was looking for an opportunity and had a conversation with someone at Liberty Mutual about potential career opportunity, and told my story, told my background, and he basically said, look, you share that story with people, they're going to be connected to you. And one of the things that I've been able to build on over the years is the Jesuit values of being a person for others. And obviously we all want to be successful professionally and financially, but I think insurance really gives me an opportunity to support people in what a lot of cases could be the worst day of their life, probably that year at least. So I've gotten a lot
Yeah.
of value out of being in that position.
No, I appreciate that story so much. It's always interesting to me how people get into whichever, member of the team in the financial industry that families have to deal with. We have to deal with our finances, and by dint of that, we have to deal with risk management. And so there's a whole crowd of people that get into the profession because there's an opportunity there. And then once in a while, you run into someone who gets into the profession because there's a real life story there and it means something deeply to them personally. And so I appreciate that you are one of our strategic partners, and have a real story to tell and can connect with the people that we work with. So once again, glad you're here.
Thank you.
Now, you mentioned being a lifelong learner, and I think these are some certifications that likely no one watching, unless they are in your industry and are really paying attention, know anything about. And as I mentioned, there are many people that get into, especially the insurance industry, just coming from perhaps wherever, trying to find an opportunity. Fewer of them actually go and do a deep dive and say, this is my career, my commitment. Here are some things that are important. I guess I will study them. Can you explain the certified insurance counselor, the chartered personal risk insurance advisor, and this one that I had not heard of at all before, the certified advisor in personal insurance? Give us just a brief synopsis of what it takes and the curriculum that you're going through.
Sure. So the CIC, the Certified Insurance Counselor designation, is more of a broad designation of the insurance industry. It talks about commercial insurance, personal insurance, life insurance, health insurance. So you get kind of a broad understanding of different aspects of the business. Take a test after 2.5 days of class, and there's 5 different segments that you have to take. You have to complete them within 5 years. It's much more, it's less focused on the day-to-day interactions with clients, and adding value to that. Whereas the CPRIA, which is offered through the Private Risk Management Association, is specifically focused on making you a more effective professional when working with high net worth families. And that was something that I took 4 or 5 years ago. The CAPI, which is the Certified Advisor Personal Insurance, I was actually in Philadelphia this week. That's a program offered through a partnership with Chubb and the University of Pennsylvania's Wharton School of Business. And it's a year-long program, and we travel to Philadelphia 3 times over the course of that year and meet weekly. I'm putting together a capstone project, which I'll present to the group in November. And it's when we travel to Philadelphia, we meet with Wharton professors, industry professionals, and Chubb executives on a wide range of topics, whether it's your personal brand or working with different generations, or we did one that I thought was effective on trust this past week. So
Well,
really focused on trying to improve and bring value to the industry as a whole, so that people see high net worth insurance or insurance in general as really a career path, establishing that career path.
yeah, it sounds like it. I mean, most people don't know the difference between getting into the industry and these licenses that we have to be able to practice. You took your property and casualty insurance license test.
Sure.
Doesn't go on the end of your name, right? It's just like you're able to do this because you took this test.
Right.
You're qualified, and some people just run with that for their career. And here you took the CIC, which is broad and gets in depth in insurance, and then the Chartered Personal Risk Insurance Advisor, which you kind of stepped up the level here. We're not just doing the generic, but here's what even people who have higher wealth interests, needs, complexity. This is what they need to look at. And so you did that. And now you were just in Philly, where my business partner is from. And I think he was there this week. So he could have run into you out in Philly and working with the Wharton School and doing something really at the top of the game. Well, I'm glad to see it, glad to hear it. I'm not surprised. I haven't gotten to know you for the past couple of years, and I'm looking forward for you, sharing some of that with our clients. So thanks again for being here. With that, we will move right along to our Q&A and get into a topic that is, as I mentioned, there's weather events happening, certainly in South Florida, but there's also a lot of conversation around, wow, is the homeowners insurance industry about to collapse? There's an article in New York Times. Maybe you can tell us a little bit about this, Nick.
Yeah. So it actually stems from a podcast, New York Times podcast called The Daily, which
Okay.
is helpful if you're interested. It's about a 30-minute podcast, 5 days a week. And it's really just the news of the day, whatever the specific topic is. But this one was called The Possible Collapse of the U.S. Home Insurance System. So, naturally it piqued my interest. And they talk about a variety of different things. I think one of the things that the industry has done well is kind of get the message out about what are the circumstances that are impacting insurance companies today, whether it's everybody thinks about, the weather, the wind, water, et cetera. But, there were regulatory aspects in Florida that were impacting how claims were filed, and how lawsuits were impacting the insurance companies. And so, rest assured, let me say this: if you're not in an area that is canceling homeowners policies or non-renewing policies, you don't really have to worry about the collapse of the entire system. It's our perspective that while there are areas where homes are difficult to insure, we expect over time investment through reinsurance to alleviate some of those concerns. And reinsurance is basically the insurance that insurance companies buy when they insure homes in what we call catastrophe exposed areas.
Okay, so you're saying unless you're in one of these areas where there's a almost consistent issue, you should be fine. So set that aside. But going back to Florida, this morning I had just heard the governor had a state of emergency, which initiates federal funds. But the folks who are there, are they more likely to meet some issues regarding their insurance?
Absolutely.
Okay.
Florida, Texas, California are real problem areas for the industry right now. There's a variety of things going on. What I would say is if you're planning to relocate to Florida, if you're able, either build a new home or purchase a home built after 2018,
Okay.
because the codes have continually changed. Things like the nails that they use to put on the roof become important. Having strapping down the roof so that if the wind blows too hard, the roof doesn't blow off, and it's
Wow.
attached to the foundation.
Yeah.
So, and people that have homes or live in Florida are thinking about it, certainly know these kind of things. A wind mitigation report comes to mind as something that will indicate to you a good idea of what the insurance cost will correlate to.
And it isn't just flooding and tornadoes. We had also heard recently about an apartment fire. He said it was kind of the biggest apartment fire in the history of Florida. Did you talk about that or hear about that at all at work?
No, I haven't actually heard it about that. I'll have to check that out. But that's yeah. I
Just
mean,
seems, so you mentioned regulation being one of them. And is it the way that the state has regulated property insurance that's causing this issue?
so in Florida, they had something called the assignment of benefits.
Okay.
And what would happen is a storm would come through and you get a knock on the door from a roofer who would say, hey, we're replacing your two neighbors' roofs. Sign this form and we'll communicate with your insurance company and we'll handle it. You'll get a new roof. And what that allowed them to do was charge the insurance company in a lot of cases, and we'll see how this is all legislated, but a lot of cases it appears that the cost to replace the roofs was inflated by the
Roofer.
industry, yeah, by
Okay.
the roofer, and so that caused premium pressure on the insurance company and profit pressure, and so they have, I think, fixed that. There was a law passed in 2022, but I believe there were something like 300,000 lawsuits filed in the
Oh my
30 days
gosh.
before that law took effect. So that's going to take a couple years to kind of work through the system. Um,
Just a few
so
100,000 cases. If it only takes a couple years, then we should be looking at Florida and figuring
yeah,
out what they're doing with their court system. Well, thank you for sharing that. I know that's really in the weeds, but it's interesting and it's literally in the news right now. We mentioned the flooding, and of course, I touched on tornadoes or hurricanes and then fires. How is the changing climate affecting the risk management options available to folks? One of the things before you answer that question, we are sustainable investing advisors when it works. We work with our clients and do that. And there's a lot of political back and forth about whether it be ESG or SRI or whatever it is. I have found it interesting to speak to the people who are actually working in the spaces where they're doing stuff, i.e., CPAs who are actually working with financial statements to articulate how these companies are changing the way that they work. Serious seminars, and then property and casualty insurance companies whose stocks are going up and down based on these realities and the expenses that they expect to incur. So I'd love your thought around essentially how climate change is affecting risk management.
well, I mean, it's no secret that the industry's been taking a beating due to weather over the last 5, 6 years. And it really started in 2017 with some of the wildfires that took place in Northern California. Um, there was a year over year increase of 21% in the premiums that were, or the losses that were paid out year over year. And it's over $100 billion at this point. So there's enormous pressure on insurers to understand, how weather is impacting their claims and how that translates to the clients themselves. What we think about is, the increase of billion-dollar weather events. Last year, there were $23 billion weather events, and it wasn't all in Florida. Certainly, there was at least one. A lot of them were in the Midwest, some were in California. So it's really sort of across the country that we're seeing these impacts. And I think, with the increase in population comes an increase in population density. I think we've all seen more pavement and less cornfields over the last, 20, 30 years. And so when everything is covered by asphalt, the water has nowhere to go when it falls from the sky. And oftentimes that leads to losses.
Well, so density does affect that. Of course it would. Of course it would. When you think of mitigation, it's almost like, well, can we stop building roads? Is that going to be the answer? Or I guess there's a lot of other things we have to consider. What topically, is there anything that you think government wide that needs to be done when you think, well, we do want to get around easily on roads?
Yeah, I mean that's probably a topic for another day. I'd say, um, you know, one of the things that they pay more attention to with building codes and legislation is hardening homes so that when the wind blows or the rain comes, they're less likely to have a loss. And insurers are, you heard me mention, the codes as pertains to the dates that the homes were built. Insurers are incentivized just from a loss perspective to insure homes that are built to better codes, right? Or
Yeah,
higher loss mitigation codes.
sure.
And so it starts with the codes and it kind of rolls all the way through the industry.
Makes sense. Well, let's personalize this for people watching, especially those who may have a more of a complex, wealth profile. Does your net worth affect the way you look at different insurance carriers and who you work with for risk management, especially homeowners insurance?
Yeah. So I think generally as net worth grows, people tend to expand, whether it's a home in a coastal area or maybe it's a home in the mountains that's more secluded and there's no, fire department or fire hydrant nearby. Um, as your personal balance sheet becomes more complex, you may find yourself in a position where if the house is over, say, $2 million, uh, you may have to go with what we'd call a premier high net worth insurance company. And all that means is that they are uh, more focused on providing coverage for complex situations and expensive homes, expensive to replace homes. But as your net worth grows regarding homeowners insurance, I mean, you and I both have clients that have a bunch of money in an investment account, but have a fairly simple life. An umbrella policy comes to mind, making sure that it aligns with at least your net worth. Plus, I like to talk about exposure. So if you have, 14 drivers and a pool in the backyard, you have a lot of exposure, even though you may not have a lot of net worth. So I try to think about it from a few different perspectives.
Now, for those who may not be familiar with the term umbrella policy, can you just explain what that is a little bit?
Sure. So all of your policies, your home, your auto, boat, motorcycle, etc., they all have a base level of liability, which means if you cause an injury, the sun's in your eyes as you're driving through an intersection and you miss the stop sign and broadside a car, um, you have liability protection, or someone's injured on your property. An umbrella policy provides an additional layer of liability protection. Umbrella is a great consumer term because it's got, the umbrella over your head, but
Yes.
think of it as in addition to or excess liability.
Yeah. And so yes, your car insurance comes with maybe a few $100,000. Your home may be the same. Trouble is when you're in some of the areas that we are in the DC metropolitan area, if someone's going to take the trouble to sue you, it probably won't be for $300,000, right? Or 500. And so having that extra policy, that umbrella, that general liability policy, which may add $1 to $2 million of extra coverage, tends to come in pretty handy.
Yeah, I mean, that's a great point, particularly in this area where you and I are.
Yeah.
You could get into an accident with someone who maybe they work for a government contractor or, are an executive at a firm, and, they're replacing their income could be a substantial number. So
Yes.
it used to be, having an umbrella was great and 1 million was enough, but I think we're moving into a phase where we really talk to our clients about 5 million as sort of an entry point.
Yeah. Yeah. That's risk management. It does cost a little bit up front, but it tends to potentially help on the back end if it needs to be used. Well, let's talk about, besides the amount of the policy, the amount of coverage, what are some other common mistakes that you're seeing? Because you leaf through a lot of different policies. Good advisors, sometimes like me, will actually send you policies to review, and you'll pick out some things that people like me who don't have your designations wouldn't be able to figure out. So, what are some common things you've seen?
So, I every day is different, which is what I love about this job and the industry. I get to speak with a lot of people, and it runs the gamut from sophisticated buyers that have been very familiar with their insurance policies and understand what the coverages are and why they have what they need, to, hey, I bought this policy when I graduated college and I've just always had that same carrier.
Yeah.
I think a mistake for a lot of people is just not revisiting or seeking to understand the policy. And we are moving into a phase where we're going to see changes made to these contracts that will put more potential money out of pocket on the consumer, because it's no longer profitable for the insurer to provide as broad coverage as they are currently. So certainly want to review it on an annual basis, not just pay the bill when you get it. And I think, if you are going to have a conversation with me or talk to a broker, having that discussion about, hey, here's what my house looks like. Here's what my basement looks like. Here's the ring that I bought my wife, or, the boat that we have, or the cars that we drive. Here's how much we drive. What should I be thinking about? What should I be concerned about? To try to identify, to your point, the things that, can frequently be left off. I mean, an example would be like service line coverage. Over the last 6 or 7 years now, home insurance companies have added this as an endorsement that's available to customers. It's usually $10,000 or $25,000 in coverage. And if you've ever driven down the street and seen your neighbor with a big trench through their front yard, they're replacing the lines that service the house. So it's gas line, electric line, water, gray water. They're expensive to repair, and we're talking $25 or $40 a year to add this to your policy. If it fails and causes damage in your home, you would need something called water backup coverage. It'll cover the damage, doesn't usually cover the pipe, and the pipe can be expensive to replace. So sometimes it's little things. Having a conversation with a broker about flood or earthquake is important. They are both specifically excluded from a homeowner's contract. And if you look at your homeowner's policy, it's probably there in all caps and big bold print. Flood insurance, every house is in a flood zone. So it just depends on the severity of the risk. Now, those maps that FEMA uses were drawn in like 1978. So they have made updates. I know you and I have talked about this, Jason, over the years.
Yeah.
They are slowly making updates, and thankfully the private flood insurance market has responded and started to offer much more sophisticated rating tools and better pricing. So you don't have to rely on FEMA to provide $250,000 in building coverage. We can get up to 10 million in most cases, depending on the house. And there's we have a flood insurance expert that I work closely with when we have homes in coastal areas.
So I heard water backup. I heard service line, check for flood and earthquake coverage. It's probably not there. And I think a compelling sentence is every house is in a flood zone. It's something to think about. Certainly. I like that you work with even an expert within your expertise on the flood side. Is there any benefit that consumers should consider, especially if they're bumping into that 7-figure, maybe 8-figure range of net worth, in staying away from some of the firms that advertise on TV, and work with a broker? Or can they get equally good coverage through working with the folks that might answer the phone from, television ads?
Yeah, that's a great point. We have a lot of families that come to us from what we would call direct writers, Allstate, State Farm, USAA, Geico. They're all great companies, but what we find is certainly when your home is over $1 million and the more expensive vehicles, they tend to be less comfortable providing the additional coverages, the OEM or original equipment manufacturer's parts, full glass. The windshields in today's cars it's very important that you replace it with an OEM windshield because the technology functions based on the glass. So if you get an aftermarket piece of glass, it may not function, and those are life-saving, incident saving technologies. So
We need to be careful with safe light repair, safe light replace.
well, I didn't say that, but I mean,
Okay.
you can get OEM glass from them. But what I would
Okay.
say
All right. Good
is,
to know. Good to know.
what I'd say is, if you have a $100,000 Mercedes, that piece of glass is about $3,000.
Okay.
So do the math, right? You may
Yeah. Be
have
careful.
a State Farm policy and you may have $100 comprehensive deductible. So maybe you make that claim. Problem is when you go to change insurers, or if you make too many of them, they may drop you, they may raise your rates, things like that. So we offer policies that include full glass coverage with no deductible.
So there is a benefit in talking to a broker like yourself, and I imagine there's probably even the benefit of in talking with someone like yourself. I don't know the questions to ask. Maybe I don't know. All I know is price. Someone like you acts more like an advisor, would you say, and saying, "Hey, if you've got this $100,000 car and $1 million home, I'm not just going to give you XYZ coverage. I'm going to actually add this, this, and this." Is that what you do?
Yeah, it's definitely more of a consultative educational approach. We try to help you understand how the policy would respond in a host of different events. Certainly the glass comes to mind, water backup. But just because you're have an expensive vehicle or expensive home, I mean, there are a wide variety of insurance companies available, and so we'll talk to the differences between what we call the standard market, middle market policies, and those premier policies.
No, that's helpful. That's really helpful. Now, your firm, NFP, was recently merged, purchased, consumed, Aon company. What do you think about the this industry now experiencing what so many others have when it comes to consolidation? Should it be a worry for consumers, for advisors, or are what you're seeing just pretty much normal stuff, and people are still going to be able to get the quality they need?
Well, I think it's all done in the name of providing high quality service. So in our case, we were owned by Madison Dearborn, which is a Chicago-based private equity firm, and we are now their, I think, highest grossing acquisition um, that they've ever had, and they're very successful. So insurers, broadly speaking, with the industry, very attractive to private equity firms. And when they're bought by private equity firms, whether wholly owned or on in a fund, there becomes this time window where they're trying to clean things up and make them run as operationally advantageous as possible. We were purchased by Aon, which is the second largest insurance brokerage in the world. And from my perspective, we went from a private equity company to an insurance company. And in the case of Aon, we fill a gap for them. We are largely a commercial property and casualty and employee benefits broker. And in the middle market, focus on companies, middle market companies, and they focus on very large organizations and companies. So it's kind of a perfect fit. They have access to a lot of different markets that will allow us to create proprietary tools for our clients. And it's just been, and really just, it's like a perfect marriage.
That's nice. And so, yeah, as opposed to being within a private equity fund worried about the next flip, you're with an insurance company that is basically filling a void.
Exactly.
That's got to be helpful. Well, I think we asked all the questions we had on this list, and so let's get back to big faces. Everyone, brace yourself. Here we are. I think it's been really interesting speaking to you not only about current events, but what might be future events when it comes to the insurance world. Is there something that you can share with the people watching that they can take home to their policy, to their declaration page, and check for really quickly so they know whether a phone call to an independent broker makes sense or whether they're fine?
Yeah. I think auto insurance is probably the highest exposure because a lot of us drive cars every day. And often when I look at an auto policy, I see really two different things. The bodily injury liability limit, which is how much would be paid out to a person if you were to injure them in an auto accident. Make sure it's more than 100,000 per person, 300,000 per accident. It should be at least 250,000 per person, 500,000 per accident. The third number is property damage, which is like, let's say you come around the corner and you pinball off 2 or 3 cars. If you don't have $100,000 in coverage, plus hopefully an umbrella on top of that, you're going to exhaust whatever limit that you have very quickly. And an umbrella policy is going to require, it's going to have a minimum underlying requirement. So making sure that your auto insurance or boat or motorcycle, what have you, is coordinated with that limit. Whatever it is, it's usually the 250, 500. And then the other thing that I counsel folks on a lot, and that we typically will add to an umbrella, is the and underinsured motorist coverage. Roughly 25% of people in Maryland, Virginia, DC, kind of varies, but it's about 25% in each state, are driving around with no insurance at all. So they're operating a vehicle illegally. Doesn't matter if you get into an accident, can't get blood from a stone, right? And so you can buy coverage on your auto policy. Each auto policy should include, there are states where you can omit it entirely, but all of the policies we sell will include, typically we match the limit of the bodily injury with the uninsured motorist coverage. And God forbid you're in an accident and you can't work, or critical injury, medical bills, long-term pain and suffering, you can file, it's effectively suing your own insurance company to obtain coverage for that. So we like to put $1 million at least on the umbrella for that. It costs about $250 a year. And it's one of those things that you'll be really happy that you have it should you face that situation.
All right, 250 liability per person, 500K per accident, at least 100K for property insurance, and an umbrella policy starting at 1 million, maybe higher. You're saying 5 million earlier. A lot for us to look at. That deck page, that declaration page, just make sure we're kind of close. Nick Canary, CPRIA, CIC, Vice President, Private Insurance at NFP, an Aon company. Thank you so much for being here and educating us on the wiles of the insurance industry, in particular, the property and casualty insurance. I look forward to working with you much more in the immediate future.
Sounds great. Thanks so much for having me, Jason. Always a pleasure.
With that, I yield the balance of your time.